start off by thanking NanoCentral and Intertech Power for putting on a tremendous show here today. I'm going to change tack, as Steve alluded to, and I'm going to talk about a commercial trading model for the base of nanoscience and nanotechnology. And there's a lot to be optimistic about. I think there have been some notable successes, as colleague Tim Harper alluded to, but there's also been some notable failures. There's many reasons why there have been failures as such. Basically talk about INSCX and what we are. INSCX is basically a collaborative effort between people familiar with nanoscience for the best part of 20 years and experienced capital market professionals, professional traders and commodity traders. To give you some background on the exchange itself, the honorary chairman resides in New York City. He's had a 45-year career on Wall Street, worked for most of the top tier investment banks on Wall Street as a senior trader, and he's the honorary chairman of the exchange. He was also one of the founders of the NASDAQ stock market, which basically fueled the IT boom, the semiconductor boom in the 1970s in the United States. The chairman in the UK and in Europe is Stephen Cash from NanoCentral. There's also representation from ISO 229, Cranfield University, Keele University in the United Kingdom, School of Applied Mathematics and Computing. And my background as CEO, I've spent the best part of my adult life involved in trading securities in one shape or another, whether equity or commodities and so forth. So INSCX effectively is a patent-pending project to launch a formal rule-bound commodity exchange to structure global trade in accredited, compliant, and validated engineered nanomaterials. Now, what are we talking about? We're talking about the raw materials base of nanomaterials. And I remember from the past presentations earlier on this morning that people talked about a lot of nanotechnology companies that were involved in manufacturing raw materials and didn't actually have a market. Well, the reason is there hasn't been a trading market in engineering nanomaterials. There's been a de facto under-the-counter market. There's been no visibility. The statement at the bottom basically explains what capital markets do. Capital markets are central to ensuring efficient interaction between competing interests across the world of business. Without these interactions, global trade as we know it would return to practice common in the 17th century. Nanotechnology, heralded as a diamond age or another industrial revolution, it needs to appreciate the historical cause and effect of interaction between science and capital markets to be in any position to accept its relevance today. These interactions from the 1790s onwards drove past innovations from the cottage to the industrial stage. Provided a simple lesson of history is learned, nanotechnology can harness the same mechanism to acquire traction to develop from within business stability and the means to further global trade. The mechanism that does that in the modern economy, ladies and gentlemen, is a commodity exchange. That's its basic function. It structures a trade process. And that is something that's been missing from the world of nanoscience and nanotechnology since its inception. But that's not peculiar to nanotechnology. A lot of established materials markets have taken some time to develop sophisticated processes of trade. And I often think that within nanoscience and nanotechnology, sometimes we're trying to rush too soon. We're expecting too much of ourselves. At the end of the day, it's taken until the late 1950s and 1960s for crude oil to trade in the manner in which it does today. Financial futures, for example, what you see these chaps in Chicago in the Mercantile Exchange, that didn't develop until the mid-1970s. So at the end of the day, what we've got is a template. We've got the template of the commodity exchange, which has been used since the 16th century, actually, with the founding of the Royal Exchange in London in 1577, was the first organised process to trade metals. All right? And why? Why do you have these commodity exchanges? Because they're used to deliver trade efficiencies to benefit suppliers, purchasers, and capital investors. And I want to pay peculiar attention to capital investors, and I'm going to return to this point later on, because a lot of people have confused capital investors with a venture capital fund or a private equity fund. A capital investor is anybody who's committed capital to a business endeavour, whether it's in stock equity, whether it's in loan, whether it's in time, whether it's in labour. That is the euphemism for capital. Capital is resource, and capital itself is a scarce resource, as we all know from economics. Now, the commodity exchange process operates on a global basis. For example, the Chicago Mercantile Exchange trades in excess of $1,300 trillion worth of business every year. So I want people to register that number, $1,300 trillion. Now, we've talked about nanomaterials and nanotechnology being a market of some $3 trillion by 2015. It's a mere drop in the ocean when you compare it to the existing global economy. And the reason why those markets have grown is the fact that they've developed proper efficiencies in the process of trade. For example, commodity markets enable price discovery. What do we mean by price discovery? Supply and demand is used as a mechanism to quantify the price of any resource, whether it's a nanomaterial or a bushel of wheat, whether it's a barrel of oil or any other material that is used across the world of business today. For example, hedging. What do we mean by hedging? Now forget about hedge funds and what common parlance when people would have you think what the word hedging means. Hedging means eliminating risk or mitigating risk within a financial or economic context. Trade integrity. When I buy something, I want to know that what I receive is what I've been told that I'm getting. And equally, if I supply something, I want to know that I'm going to be paid. That's one of the functions of a commodity exchange, is to ensure that the buyer receives money and the supplier, the purchaser receives the material that they've ordered. And incidentally, we've heard a lot of talk about financial crises and collapses and so forth. A commodity exchange has not collapsed through default since 1905. That is a historical fact. Not a single commodity exchange has defaulted in a trade since 1905. Now, several investment banks and some of our more illustrious friends in the commercial banking world, they have collapsed. What I'm trying to say to you is that the exchange process doesn't. It's got inbuilt safeguards built into it, which aren't determined by a government, they're determined by the market participants themselves, right? So, what is INSCX? What can INSCX bring? Well, for a start, it brings combined knowledge. For example, we understand nanotechnology. For example, Jeremy Ramsden, who's going to speak at some stage later on, I think tomorrow, sits on the ruling committee of the INSCX, and he's the chair of nanotechnology at Cranfield University. We've also got my colleague Mark Warburton, who spent 20 years from the first Unity reports in 1997, assessing the generic evolution of nanotechnology. So we have the expertise within your field to understand exactly what nanotechnology is. And secondly, we can combine that with a thorough understanding of what capital markets are. I mean, I've heard people come up to me and compare the INSCX to a stock market. It's like comparing a block layer to somebody who flies windmills. They've got nothing in common. The stock market is somewhere where people list equity. We've heard people talk today about the NASDAQ and so forth, and the share prices, etc., etc. But I think one of the crucial points that come out is the absence of standards. The absence of standards within materials, within nanomaterials. We don't know. Certain companies are more proactive, and I mean within the UK we've got Thomas Swan and so forth, who are more proactive in ensuring that they adhere to standards and so forth. But there's no guarantees within the industry. We can't be sure what we're receiving is what we're actually paying for. I mean, for example, I've known situations where certain materials have been characterized and they haven't been nanoscale materials, and they've been proven otherwise, but they've been sold as that in the first instance. So supply, for example, we've engineered a situation where all supply that comes onto the INSCX is sourced from accredited manufacturers. That means manufacturers who've adhered to the nanomaterial SHE good practice code, which is effectively run in this country by Assured Nano, and is being coordinated by Assured Nano on a global scale. So that means that anybody supplying into the market will have reached a certain standard.